Welcome to all the students once again. This is the last part of our chapter Corporate Securities and Sources of Long-Term Finance. Okay, today we will cover the next, that is the last half of our chapter, which is based on dividend decision, in which we will see background of dividend policy, theories of dividend, measures of dividend policy, dividend yield and dividend payout. So let us start the lecture with the meaning of dividend. See, the main objective of every business concern is to earn more and more profits for its members. Because if a business earns profits, then there is a scope of expansion and the diversification of the business. So that is why the main objective of every business is to earn more and more profits for its members, because they are the important people who give their investment in the business so that business can expand and diversify its activities. So it is their responsibility to earn the profits so that it can provide opportunities to its members. So these profits are then distributed among its members as dividends. So whatever the profit which is gained by the organization or gained by the business is being distributed among its members as dividends. All the profit is not distributed. Some is retained with the business for the further activities of the business, and the rest part of the profit is distributed among the members, that is among the shareholders as dividends. Dividend refers to that portion of the profits which is distributed to the shareholders of the company. So it is a return paid by the company on the investment of those who provide it the ownership capital. So earlier also I have said the ownership capital or the investment which is made by the members, that is the shareholders. So it is like a return which is paid to them as a dividend. Okay, so dividend is declared at every annual general meeting, and the rate of dividend is recommended by the board of directors of the company. So this is what a dividend is. Okay, dividend refers to that portion of the profits which is distributed to the shareholders of the company. Now let us see background of dividend policy. See, profitability, growth and survival are the prime objectives of any business enterprise. That is truly right. Profit, growth and survival. Growth is also necessary, survival is also necessary, but both growth and survival are based on profit. If a business is earning profit, then it can only grow and then only it can survive in the competitive market. So that is why the both growth and survival depends on what? Profitability. And this measures, that is a profit, measures the firm's ability to earn the income. So every business tries to maximize their profits, but it is argued by the modern thinkers that firms should try to maximize their ability to earn more profits rather than thinking about just to maximize profit. प्रॉफिट कमाना सोचने के बजाय ये सोचना चाहिए कि हम कैसे अपना प्रॉफिट अच्छे से कमा सकते हैं, उसकी एबिलिटी कैसे इंक्रीज कर सकते हैं, अपना क्वालिटी ऑफ वर्क कैसे अच्छा कर सकते हैं, सो दैट हम प्रॉफिट अर्न करें. So that should be thought by the business enterprises. Okay, so firms in this way decides how much to pay in dividends and how do those dividends actually get paid to the stockholders. Therefore, a proper dividend policy has to be framed. Now, what is dividend policy? Dividend policy refers to the policy concerning the quantum of profits to be distributed as dividend. What is dividend policy? Dividend policy refers to the policy concerning the quantum of profits to be distributed as dividend. Means dividend policy ये help करता है हमको पता करने के लिए, ये policy frame करने में हमें पता करता है कि कितना हमें profit as a dividend distribute करना है shareholders को. It helps us to devise such a policy in deciding how much of profit is to be distributed as a dividend out of the profits which is earned by the company. So this is what a dividend policy means. It is an important area of concern for finance manager as decision taken by the management in this area affects the growth rate of the company, its credit standing, share pricing and ultimately the overall value of the company. Okay, so framing dividend policy requires extreme care and prudence on the part of the policy framers of the company. So this is a very important area of concern for the management, and proper decision has to be taken by the finance manager because it affects the area of like growth rate of the company, its credit standing, share pricing and ultimately the overall value of the company. Now let us see the measures of dividend policy. What are the measures which help in measuring the dividend or how much dividend to be paid to the shareholders. So if you see, there are two measures basically concerned. The first one is dividend yield and the second one is dividend payout ratio. So what is dividend yield? Dividend yield is annual dividend stated as a percentage of a share market price. What is dividend yield? Dividend yield is annual dividend stated as a percentage of share market price. The dividend yield is significant because it provides a measure of that component of the total return that comes from dividends, with the balance coming from price appreciation. If you see, dividend yield is calculated as dividend yield equals to annual dividends per share divided by price per share. This is the way how dividend yield is calculated. The next one is dividend payout ratio. The dividend payout ratio is the ratio of the total amount of dividends paid out to shareholders relative to the net income of the company. How it is calculated? The dividend payout ratio is the ratio of the total amount of dividends paid out to shareholders relative to the net income of the company. Here the dividend is in correspondence to the net income of the company. It is the percentage of earnings paid to shareholders in dividends. The amount that is not paid to shareholders is retained by the company to pay off debt or to reinvest in core operations. It generally provides an indication of how much money a company is returning to shareholders versus how much it is keeping on hand to reinvest in growth, pay off debt, or add to cash reserves. So basically, dividend payout ratio helps or it provides an indication of showing that how much money is the company retaining in the company, and how much money or how much amount or how much dividend it is going to pay to the shareholders. So basically, in this way, dividend payout ratio is much better than the dividend yield. Then how is dividend payout ratio is calculated? It is calculated dividend payout ratio equals to dividend paid to shareholders upon net profit after tax. So this is the way how dividend payout ratio is calculated. Okay. Now let us see the theories of dividend. In theories of dividend, first is the irrelevance concept of dividend. What is irrelevance concept of dividend? Dividend irrelevance approach explains that dividend policy has no effect on the share price of a company, and as such it has no significance. So irrelevance concept of dividend क्या कहता है कि जो कंपनी की डिविडेंड पॉलिसी है उसका कोई भी इफेक्ट नहीं होता शेयर प्राइस, कंपनी के शेयर प्राइस पर. ये इररेलेवेंस कॉन्सेप्ट ऑफ डिविडेंड कहता है. एंड जिन्होंने ये इररेलेवेंस कॉन्सेप्ट ऑफ डिविडेंड प्रोपाउंड किया है, उनका ओपिनियन ये है कि इन्वेस्टर्स डिफरेंशिएट नहीं करते डिविडेंड्स और कैपिटल गेन्स में. ठीक है. सो दिस इज व्हाट योर इररेलेवेंस कॉन्सेप्ट ऑफ डिविडेंड इज. नाउ हम देखेंगे कि इररेलेवेंस कॉन्सेप्ट ऑफ डिविडेंड की थियरीज में कौन कौन सी थियरीज आती हैं, इस अप्रोच पे कौन कौन सी आती है. फर्स्ट इज MM अप्रोच. ठीक है. दैट इज मिलर एंड मूडी ग्लानी ने ये MM अप्रोच दिया था. So they have argued that the value of shares of a firm is determined by its earning. They have argued that the value of shares of a firm is determined by its earning potential. कि कितना earning potential है उस firm का, and investment policy, and never by the pattern of income distribution. So what they have argued that कि value of shares of a firm, कंपनी की वैल्यू ऑफ शेयर्स, कंपनी के शेयर्स की वैल्यू किससे डिटरमाइन करी जाती है? अर्निंग पोटेंशियल से एंड इन्वेस्टमेंट पॉलिसी, ना कि पैटर्न ऑफ इनकम डिस्ट्रीब्यूशन, हाउ इट इज डिस्ट्रीब्यूटिंग द इनकम. Thus, the value of the firm is unaffected by dividend policy. That is, dividends are irrelevant to shareholders' wealth. They build their arguments on the basis of following assumptions. They assume the following assumptions. What are the assumptions of their theory? That capital markets are perfect. There is a perfect competition. Taxes do not exist. The firm's capital investment policy is independent of its dividend policy. Investors behave rationally and risk or uncertainty does not exist. So these are the assumptions of this approach. The second irrelevance theory is residual theory of dividend. The theory states that dividend decision is primarily a financing decision. It means that the profit should first be retained within the firm for meeting investment needs. If any amount remains after this, then that amount may be distributed as dividend. In other words, this theory does not assume the dividend decision as being very relevant to the maximization of shareholders' wealth. So what does this theory say? This theory says that the firm should first retain the profit within the firm for the investment needs. The firm should retain the profit for its investment needs, and if any amount remains, then only it should distribute the dividend. This is what the residual theory of dividend says. Okay. Now next comes your relevance concept of dividend. What does relevance concept of dividend means? See, Myron Gordon, James Walter, John Linter and Richardson, among others, are associated with the relevance concepts of dividend. According to them, dividend policy of a firm has a direct effect on the position of a firm in the stock market. While the higher dividends enhance the value of stock, the lower dividends reduce its value. So according to them, according to Gordon, James Walter, John Linter and Richardson, relevance concept of dividend means that whatever the dividend policy of the firm is, it has a direct impact or direct effect on the position of the firm in a stock market. वो डायरेक्टली इम्पैक्ट करता है फर्म के पोजीशन पे इन द स्टॉक मार्केट. मतलब डिविडेंड पॉलिसी इधर इफेक्ट करती है वैल्यू ऑफ शेयर्स, कंपनी के शेयर्स की वैल्यू को इफेक्ट करती है. जबकि इररिलेवेंस कॉन्सेप्ट ऑफ डिविडेंड क्या कहता है कि डिविडेंड पॉलिसी कंपनी की कुछ भी इफेक्ट नहीं करती वैल्यू ऑफ शेयर्स, कंपनी के वैल्यू ऑफ शेयर्स से. बट रेलेवेंस कॉन्सेप्ट ऑफ डिविडेंड कहता है कि डिविडेंड पॉलिसी, जो भी डिविडेंड पॉलिसी है फर्म की, उसका डायरेक्ट इम्पैक्ट होता है कंपनी के पोजीशन पे. व्हाट इज द पोजीशन ऑफ द कंपनी इन द स्टॉक मार्केट, या इट अफेक्ट्स द वैल्यू ऑफ शेयर्स ऑफ द कंपनी. So this is what the relevance concept of dividend is. In this first comes Gordon's model, that is dividend growth valuation model. Assuming no financial leverage, absence of taxes, no external financing, constant return, constant cost of capital and constant retention ratio. According to him, the dividends of most companies are expected to grow, and evaluation of value of shares based on dividend growth is often used in valuation. He is of view that the market price of a share is equal to the present value of an infinite stream of dividends to be received by the shareholders. So, what are the assumptions of his theory? That there is no financial leverage, taxes नहीं है, no external financing is there, constant return मिलता है, constant cost of capital भी है, and constant retention ratio भी है. Retention में जितना amount वो retain कर रही है वो भी ratio constant है. It has that this things has been assumed by the Myron Gordon. So this is what the dividend growth valuation model says, that कंपनी का ग्रोथ हेल्प करता है. डिविडेंड मोस्ट ऑफ द कंपनीज आर एक्सपेक्टेड टू ग्रो. What according to him, the dividends of most companies are expected to grow, and evaluation of value of shares based on dividend growth is often used in valuation. Means जो जितना डिविडेंड कंपनी पे ऑफ करती है अपने मेंबर्स को या शेयर होल्डर्स को, वही चीज़ acts as a base for the valuation of shares. ठीक है, ये आपका डिविडेंड ग्रोथ वैल्यूएशन मॉडल कहता है. नेक्स्ट कम्स वॉल्टर्स मॉडल ऑफ डिविडेंड पॉलिसी. He suggests that dividend policy and investment policy of a firm are interlinked, and hence the dividend decision always affects the value of a firm. Means dividend policy and investment policy of firm are interlinked, दोनों interlinked है. इसके कारण डिविडेंड डिसीजन हमेशा फर्म के वैल्यू को या वैल्यू ऑफ अ फर्म को इफेक्ट करती है. His proposition clearly states the relationship between the firm's internal rate of return and its cost of capital. In short, in case of firm's return on investment is more than the cost of capital, it must retain its earning, and otherwise it should distribute its earnings to the shareholders. So this is what a Walter's model of dividend policy is. In a simple word, the dividend policy and the investment policy of a firm are interlinked. That is why the dividend decision always affects the value of a firm or the share price of the company. So this is what a Walter's model of dividend policy is. I hope you have understand this lecture. So the syllabus of our chapter is over, and I request all the students to submit the home assignment within the due date. Till then, thank you.